Good afternoon, everyone. I am Ria Matthew, your host for today, and I welcome all of you to this special webinar organized by BondsIndia in collaboration with Patel Engineering Limited, where we will take a deep dive into the infrastructure sector and how retail investors are driving growth in this space. And to make this webinar interactive, I will also be throwing questions to the attendees, and the person interacting the most with us will be receiving a special prize from us. So be sure to look out for those questions. At Bonds India, we simplify fixed income investments for all investors through a SEBI-registered online bond platform. All attendees can connect with our platform after the webinar and access the extensive bonds library to help you navigate the fixed income market. Today, we bring you deep insights into the infrastructure sector, its role in propelling India's economic development, how it has evolved over the years, and give you a forward-looking perspective amidst the government's focused efforts to drive growth in this space. And we will also explore how a major EPC player, Patel Engineering Limited, is positioning itself to capitalize on the opportunities in this space, how the bond markets are emerging as a new solution for infrastructure financing, and how retail investors are driving this change. So before I introduce you to today's panel, I have a question for the attendees. Have you ever invested in an infrastructure bond? And what are the factors that you look at when you are investing in a company? So to guide us through today's discussion, we have Dr. Rishi Vyas, who is Additional Vice President Finance at Patel Engineering Limited. Dr. Rishi has over 15 years of experience in banking, corporate finance, and infrastructure financing. An MBA, a CFA, and a PhD holder from Mumbai University. He has previously held leadership roles at Loha Ispat Limited and Global Financial Services. We also have Mr. Amol Warke, who is Joint General Manager Finance at Patel Engineering Limited. Mr. Amol has over 20 years of experience in corporate finance and project funding. He has extensive expertise in real estate transactions and working capital management. Our third panelist for today is Mr. Prakash Kabra, who is a credit rating expert and co-founder of shubhmap Financial Solutions. He has over 22 years of experience in corporate banking, handling credit risk and underwriting, portfolio monitoring, and credit ratings. He has previously held senior roles at MNC banks and rating agency and is an MBA in finance from IBS Hyderabad. So welcome, sirs. Thank you so much for joining us today.
Thank you so much.
So together you will help us understand the dynamics and trends that go on in the infrastructure sector, introduce us to the company, your vision, your journey, explain how Patel Engineering is leveraging this shift towards growing NCD issuances, and how ratings help investors understand the risk profiles of companies. So for all our viewers, Patel Engineering is a landmark player in the infrastructure domain. The company has experience of shaping vital projects across the nation and has completed 350 projects till date. They service a diverse clientele, including government and PSU clients, as well as commercial and international ones. So to take a closer look, Dr. Rishi and Mr. Amol will be giving us a comprehensive perspective on the infrastructure sector and the company, and then we will move on to a Q&A session with the panel. So before we go ahead with the PPT, I have another question for the attendees. Which sources do you rely on most when you are looking to invest in an infrastructure bond? Do you approach financial advisors or online platforms? Or do you attend company presentations or webinars like these? Do let us know in the chat. So while our attendees are giving us their answers, I will hand over the stage to you, Rishi sir and Amol sir.
Thank you so much.
Thank you.
Thank you so much for a nice introduction. So I'm Dr. Rishi Vyas, and while she was questioning the audience about what kind of product and what kind of choices they make, I just reminded of my PhD. I recently completed PhD in financial planning for salaried people in Mumbai city. So I had a lot of such questions while I was preparing for my Viva. So you got me back to my study days. Thank you so much. So I have a small presentation for the audience, which will cover a few facts about infrastructure industry, how India's infrastructure is shaping up, and what is the kind of role Patel Engineering is playing and can play for future growth in India. Can we share the presentation slide, please? I hope the slide is visible to everyone. The first slide is infrastructure industry highlights. So first slide covers few of major projects which company has completed. The next slide is infrastructure industry overview, we will be covering dams, irrigation, tunnels. When we say dams, dams covers hydropower projects as well. So role of infrastructure in India's economic development. Public infrastructure is the backbone of economic development, enhancing connectivity, trade, and overall quality of life. India is world's fifth largest economy and has made remarkable infrastructure development over the past decade. When we say infrastructure, is the key industry which defines every country's growth and which defines our quality of life. See, I would like to share a few personal thoughts also while doing the presentation. In India, every taxpayer thinks we are paying a lot of taxes, but we don't have the quality of life other countries are having. We have recently visited countries like UK, Singapore, US, where a lot of people are paying lesser taxes than us, but they have very good quality of life because their government has been working relentlessly on the improvement of infrastructure since many years, maybe 30, 40 years. However, Indian government has now put more focus on infrastructure, and we are in a positive era where government focus is on improvement of infrastructure. And when we say infrastructure, for a layman, it consists of 4 or 5 major industries, which is road, railways, transport, water transport, air transport, power, irrigation, tunnels. If these industries are good growing, they have made good development, means you will have a good quality of life. And believe me, Government of India and companies like us are working very hard to do that. I'll cover those facts in my next slides. Next slide is role of infrastructure in India's economic development. The slide is quite visible. Only two facts which I will mention is during 2014-15 financial year, Indian government spent around 2,49 crore for capital expenditure infrastructure project, which has increased to more than 11 lakh crore, which is an increase of more than 5-fold. So only these numbers shows that the government focus on infrastructure has been doubling every 2-3 years. And from 2 lakh to 11 lakh is a huge investment. The result of this investment will be seen in next 4-5 years. As we see in Bombay, we are seeing a lot of development. Before 2 or 3 years, when we used to come to town, our office is in Andheri, Jogeshwari. So it used to take us 1.5-2 hours to travel here. However, once we cross Bandra now, we are sure that within 15 minutes we will reach Churchgate. So that shows the quality of life for a person like me who travels every day in Mumbai city has improved. But yes, there's a lot of potential to do more, for which government and players like us are doing. India, since independence, have developed a lot of good projects. Not in only last 10 years. Yes, government has been working. The progress may be slower, may be limited due to a lot of other challenges. However, in power sector, we read it in the books also. We have created projects like Bhakra Nangal, which is in Himachal, Damodar Valley Corporation, Koina Dam, which is having around 2000 megawatt capacity, Tehri Dam, which is one of the tallest dam in India right now. So government and infrastructure PSUs has been building and working on these projects. However, the speed at which they should have been working was not there, which has seen a tremendous improvement in last 7 to 8 years. Same way, irrigation projects also, we have made projects like Indira Gandhi Canal, which has helped my state, which is Rajasthan, Himachal, Nagarjuna Sagar in south, Assam Rail Link project, which is in northeast, where the government is putting a lot of focus now. Our company is doing more than 5 projects in northeast region. Udhampur, Baramulla is one of the recently completed projects. Why it is very interesting? Because since independence, there was no railway line between Jammu to Kashmir. It's been over 60-70 years, no one thought of building a railway line. If we travel by road, it used to take 12 to 14 hours to travel. However, it has been reduced substantially, and we are fortunate that we are one of the player who has built 2 longest line in that project. So there is a railway line now which is active from Jammu to Srinagar for the people of Jammu Kashmir, for the people of India. And when a railway line becomes operational, it doesn't only make people travel from one city to other city. It opens up a lot of opportunities, a lot of industries gets open. So effect of this railway line, various industries like IT, transport, tourism, logistic, they will have improvement. So wait for 4-5 years and you see the development, more development in Jammu Kashmir state. We are covering power industry. So in India, we are the third largest producer and consumer of electricity because of the kind of regional spread we have, the kind of population we have. We have 500 gigawatt of non-fossil energy capacity target set by our PM Modi ji. We have over 50% power supplied from renewable source, which is one of the most unique advantage India is having. Power capex is growing, and it is going to grow for more than 10% per annum every year, because a lot of deficit is there for power requirement, and government is working all over all regions, be it north, northeast, south, and our country is also working in a lot of big projects. We are building the largest hydropower project in Assam, which we never heard that northeast region will have such development stories. Subansiri, which is going to be inaugurated in next few months, that is going to be a 2000 megawatt capacity project, which is going to be India's largest hydro. Similarly, India is focusing on similar more hydro projects in Brahmaputra. More than 200 projects are being planned in Brahmaputra river. One of the project will be Dibang project, which is going to be India's largest, which is going to be announced soon, which will have a capacity of more than 2880 megawatt. So such project will change India's future. Similarly, see, hydropower projects are long-term projects. These are made majorly near rivers, or these are run on the river projects. It has come with their own risk also and own rewards also. However, there were issues and limitations which India had in those projects. A lot of projects were getting delayed. However, government has improved their approval state, their payment cycle, which I have covered in the next slide. There's one more innovative type of project for hydro is upcoming now, which is pump storage project. Pump storage projects are mini hydro projects. See, hydro project duration is average 4 to 6 years for any project in India. However, pump storage project average duration is 3 to 4 years. Plus, it doesn't require a river or a sea nearby, because pump storage projects are a shaft or reservoir created near the site, then 2 tunnels are created. So during peak hours, electricity is generated by flowing the water into tunnel and turbines, and in non-peak hours, water is again sent to the main reservoir. So what happens is, see, we are doing a project of such kind in Ooty. So industrial zones where the balance of demand and supply is gap is in peak hours, pump storage project can be a very useful technique. So India plus a big, very few giant private players are also coming up with pump storage, which will fill the electricity gap in such areas. Government is putting a lot of focus on hydro sector. NHPC is one of the major PSU client. When we say government, see, when I was small, I used to understand government has to work, government is not working. But however, government has a proper professional setup. Government has PSU companies who are professionally run companies. They have separate board, separate GM, separate project managers who takes care of the project work which government allots them. So when we say power, government have specific SPVs which have been created to take care of the power projects. NHPC is one of such SPV, which is a AAA rated company. One of the Pancharatna companies in India, National Hydro Power Corporation. Same way, one company is called SJVN, which is Satluj Jal Vidyut Nigam. NIPCO is there, Northern Eastern Electrical Power Corporation. NTPC is National Thermal Power Corporation. So government has created such PSUs where a proper company setup is there. More than 1,000 employees are working, and based on the government initiative approved plans, they take care and they implement those projects. So government actually doesn't do anything much. They have to strategize and make the policies. Then it is up to the PSUs and companies like us to execute and implement those projects. So this slide covers how government is focusing on hydro sector. NHPC plans more than 80,000 crore investment for 20 megawatt PSPs and green energy programs. SJVN also is initial pact to develop 1800 megawatt pump storage projects. NTPC, NIPCO is also planning more than 5 pump storage projects. So all PSUs together are working on creating a better power supply regime for India, which is from hydropower also, from pump storage projects also. Same way irrigation also. So irrigation, obviously, once a lot of focus is on agriculture now. However, coming from Rajasthan, we had a lot of water scarcity while we were doing agriculture. Now, in the last 3-4 years, Indira Gandhi Nehar has come and it is helping farmers to do better farming. So government is putting just very micro irrigation schemes wherein they do supply the water from the canal to all remote areas of agriculture through drip irrigation or through canal supply. We are also building one such project in Madhya Pradesh also. So wherever agriculture has water scarcity, government is building a lot of canal projects, and they are trying to distribute that water through micro irrigation projects throughout India. Uh, One such, if you've heard, Gati Shakti scheme which India has developed, which is to connect major economic zones of small cities. So micro irrigation also will play a very important role. It is a scheme which is been monitored by a satellite network or India's government own iCloud, which is called Meghraj.
Yeah.
So through this, they are trying to connect all major small cities, productive cities with each other through irrigation, through waterways, through airports, through roadways. So this is monitored by a very unique AI technology, wherein government is monitoring through satellite where road is required, where port is required, where airport is required, and where the water requirements through irrigation can be completed. They are monitoring each project, and wherever demand and scarcity is there, they are planning new projects in that region, which is a very unique initiative by any of the government in world right now. Yes, when we talk about government projects, big projects like power, pump storage, irrigation, roads, they had challenges. I had the opportunity to visit London and Singapore, do roadshows for my company or for my sector, and a lot of big companies, financial institutions, insurance companies, before 5, 6 years, 7 years, they were not very positive on the setup of government and how Indian government works, because they had examples for projects which have been delayed for more than 5 years, 6 years. Project used to be announced, but however, approvals were not there. Land approval, environmental clearance approvals were not there. And even after announcing the project, there were delays in projects. Then there was receivables delays also for the contractor. That has led to a lot of EPC players going under stress between 2012 to 14. Fortunately, government has changed. Even state government, even if it is not the main government of current government, other governments are becoming very active on addressing these problems. So nowadays, if any project is announced, it is necessary to have all approvals in place. Majority of approvals, 70-80 approvals should be in place. Before that, they cannot announce a project. One is that. So that delay in approvals risk has been mitigated, in getting mitigated on various projects. Then second is arranging funding for that project. So traditional funding arrangements are like bank finance, submitting guarantees. However, we are seeing from our companies, I'm not aware about the other companies, but a lot of government projects are giving you option to take mobilization advances. So even if you don't have fund right now to put in the project, you have working capital equity. However, government, if you have bank guarantees or bonds, so you can provide those guarantees and take mobilization advances for projects, so you can fund the project right from the beginning. So you don't have any delays. And majority of projects are EPC or monthly billing contracts. So every month, once you start the project, government will start paying you the bills. A lot of projects were milestone-based projects before 7-8 years. So a lot of working capital was going by contractor. And then there was a slow in delay in projects. However, that has been mitigated by these options. So like Subansiri project, which have been allocated to us for construction of tunnels and powerhouse, we were given immediately advance from the client. So the project was awarded in 2020. As we said in 25, the project is already nearing completion. So any hydro project within 4 or 5 years nearing completion was a rare sight in India before 10 years. But we are seeing the actual result by these initiatives. One of the third limitation was any dispute used to go to arbitration, and the arbitration used to go for various years. The arbitration legal process, government has come up with two good guidelines. One is arbitration bill has been passed in 2017-18, where the arbitration process timeline has been limited to 18 months. I have seen personally in my company case where the arbitration process has gone for 4-5 years in old projects. Now the limited timeline is only 18 months, where an arbitrator has to declare an award, be it favor of client or contractor. That had limited the arbitration process. If the arbitration award is in your favor, there are two options by Government of India to avail money against those awards. One is Niti Aayog guideline, wherein 75% of the award amount you can avail through bank guarantees. If you have bank guarantees, a lot of EPC contractor has non-fund based lines. Like us, we have sufficient non-fund based lines available from our banks. However, in 21-22, they brought a new initiative called Vivad Se Vishwas scheme, wherein if you don't have bank guarantees, you have two options. If you have arbitration award in your favor, you can settle the amount with the client without guarantee. They can pay you under that guideline. And if you have any court award in your favor, up to 85-90% amount you can get. So these two schemes have helped EPC contractor substantially. So the companies which were under difficulties or stress, I will say, because of delay in receivable in 12-14, that era has passed. The companies which could survive those era, now all those companies has good platform to grow. That we have seen in last 4-5 years. Government payments are on time, approvals are getting on time, though arbitration delays are there. Some geological issues happens in all projects, but government is forthcoming and proactive to address those problems. They give you additional advances also if it's required. The government approach, which was initially to announce a project and keep the project under implementation, has been changed. Now they want to complete the project. So they are enabling EPC contractor to complete the project in time. So in last 3-4 years, you see a lot of projects which have been announced and completed and inaugurated. So we have completed the Jammu Kashmir tunnel, which was completed within timelines. The Subansiri project getting completed in timeline. One tunnel project which we did in Tawang, which is near China border, which was for the defense ministry. Very difficult situation. 6 months only you can work. 6 months is because of the snow or you cannot work. However, that project was completed within time. That project is called Sela Pass Tunnel. You can Google it. That was inaugurated by Modi ji. Our MD has also attended that event. That was for border road organization. This is the longest tunnel at 13,000 altitude. One of the unique project which India has done on the borders. And we are fortunate that our company has completed that construction. So such examples are being seen that projects are getting announced and completed within the time range, which is a positive change for India. So these were the challenges, and how government and us, we have understood our mistakes and we have tried to mitigate that risk, and how these problems have been overcome. This slide covers that. Coming to the market potential, yes, infrastructure segment budget is around 3.4% of the GDP, which is around 11 lakh crores. That much amount of fund government is ready to infuse to develop the infrastructure. And what will happen if they infuse that much budget? The companies which are associated in development and infrastructure projects will benefit. Be it hydropower sector, irrigation, tunnels, roads, railways, ports, all industries are going to get benefited if they have proper eligibility, proper pre-qualification criteria, proper working capital availability, and proper expertise. Then these companies will be benefited from these schemes. India has around 15,000 megawatt hydro potential in Arunachal Pradesh. When I say Northeast, government has been putting a lot of push in Northeast sector, be it road, hydropower, every sector. If you search in every state of Northeast, some projects are going on which are substantial and of national importance, which is helping the Northeast region to develop. There are more than 60,000 megawatt of pump storage which are under survey, because pump storage is a new concept. It will take time to implement that, but surveys and investigation already started. So maybe next 1 to 2 years, we see a lot of projects which will be announced in pump storage projects. 6,000 megawatts of projects in Himachal and Jammu Kashmir, again north region, where a lot of rivers are there. Wherever river and water is there, hydropower can be created depending upon the geology. Jammu Kashmir is creating a lot of hydro projects. There is a river called Chenab River, where we are also doing 2 big hydro projects. A lot of other companies are also doing big hydro projects. So government trying to utilize the natural resources, natural situation what you have in a country, and try to utilize to have an economic development in each state. Jal Jeevan Mission covers the irrigation department. Then budget allocation of Pradhan Mantri Krishi Sanchay Yojana is again irrigation. More than 8,000 crore has been allocated. Other states like India and Nepal, when I say Nepal, Indian companies like SJVN, which is Satluj Vidyut Nigam, in collaboration with Indian government, are building hydro projects in Nepal also. One such project is on Arun River, Arun 3 also we are doing, and they are going to come up with 2 more big projects in Nepal, which will cater to supply in Nepal, and additional supply will be catering to the nearby states of India. We have focus on hydro, highway and road projects also. More than 10 lakh crore has been allocated. And tunnel works also. Tunnels are important. When see mostly tunnels are part of road projects. However, we are building water pipeline underground tunnel projects also. In Mumbai, as we sit here, I am sitting in Churchgate. You never know, below the 100-meter ground, there is a tunnel which is under construction. So it is not only the metro construction is going on. Water pipeline construction is also being shifted from ground to underground, which is one of the major development for Mumbai. And next 4-5 years, majority of water pipeline which has having threat of replacement of pipes. There's a breakage also. There's theft also. There's a risk of water being poisonated because of lack of good quality. So government has started to plan a water pipeline project, in which all over Mumbai, all water pipeline will be made underground. Currently, we are doing 2 or 3 projects for that segment also, in Powai also, in Raigad also, in Chembur also. This is not many people know, but yes, government is working on that segment also. So coming to means of financing, yes, traditional means of financing in infrastructure projects were bank finance, loans, cash credit, equipment loans. However, now innovative means of financing have come. Bank guarantees, which EPC contractor used to depend upon bank only. Now, like international segment, insurance companies are ready to sanction you surety bonds also, which is very one of the most breakthrough development for companies like us and infrastructure project, where bank guarantee can be limited because bank has some limited potential to take risk on various industries. However, the kind of infrastructure projects are coming more than 10 lakh crore. Too much pressure might come on bank to provide bank guarantees, because it depends upon the rating of the company also, how much they can sanction. So the new concept called surety bond, which has been very spreading in road sector, because Gadkari ji has welcomed that scheme, and a lot of road companies clients like NHAI have been accepting. However, we are seeing a positive change in power and infra also. Companies like NHPC, NIPCO have started accepting bonds from insurance companies. We are one of the first companies wherein surety bond have been sanctioned, and we have submitted performance bond, bid bonds also. So that creates a second avenue for contractors like us to go for bigger projects and more orders, because we have two options to provide. We can provide bank guarantee also, we can provide surety bonds also. So apart from that, Indian government has opened National Bank of Infrastructure Development also. So that is NAFID, that promotes and focuses on only infrastructure projects. They understand projects like better than any company, and they try to fund for long-term projects. So majority infrastructure projects are long-term, and there is not many options for long-term financing is available. Plus third is equity, and yes, bond market also. So initially, earlier companies used to depend a lot on equity. However, equity comes with their own risk. Not all the information are very transparently available. When you go for equity market, you do your desk research, you talk to few people and then you put in equity. However, when you go for bond investing, you have properly rated bonds, where a good rating agency already rated, done the due diligence. You have good platforms like BondsIndia, other platforms are also there. They do their due diligence before launching any bonds, and which provides you better returns than any traditional bank financing. So a lot of innovative products are also being introduced, which will help companies in EPC and infrastructure segment to take up more projects. And when we say whenever we present, we say we are trying to be a part of India's growth story, because we take a lot of pride when any project is getting completed, while like India's largest hydro project, or Jammu Kashmir railway line. So we take a lot of pride. However, it is not only us which should take pride. It is the who is financing those projects also. So equal credit to the banks also, financial institutions also. And when I say bond market, because I am also a bond investor, retail bond investor, I invested in a few bonds. So it makes me also feel pride that if I'm investing in a long-term bond, I am also becoming, maybe at a very minuscule level, becoming that part of that growth story, because that project is funded by maybe 1 lakh or 2 lakh or 5 lakh rupees of mine. So while doing my job, it gives me good satisfaction that I am playing some part in Indian economy. So this is how I take that investment satisfaction. So after industry, coming to Patel. So I represent Patel. I am working with Patel since 11 years, and yes, our company has seen ups and downs. However, company has survived. The promoters, the management team, the company's team have stood by company in thick and thin. And in my last 11 years, 12 years of experience, this is the best time which we are seeing for industry also. Companies like us, we survived the difficult phase in 12-14. Our promoters kept infusing funds at the right time for company. We did not raise too much of bank finance during this period. However, banks have supported to us. Our employees, I would like to mention one thing about our company is, during COVID era, a lot of companies were under stress. The projects were shut. Two things which has helped companies like us. Why I'm so proud of my company, because in COVID era, none of our employee was fired, even if there was lack of work. Yes, project salaries were delayed, which were made on time once we started functioning properly, and none of the employee left us also. So this is the kind of emotional connect we have with our company. This company is not a new company. This company was incorporated in 1949. So since independence, we are working in this segment. More than 7 decades of experience this company is having. We are having presence in all major states in India. We have completed more than 300 kilometers of tunnels, more than 5.5 lakh acres irrigated, more than 15,000 megawatt of hydro project we have been associated, and we are the only Indian company which has completed 87 dams. Not a single company in India in our segment has completed 87 dams, which we are proud of this fact. We are at a very minimum level, but associated in road projects also. However, our prime focus is in our core expertise, which is hydro, tunneling and irrigation. So we have completed, as Riya has already mentioned, we have completed more than 350 projects till now. We have around 50 projects undergoing in various segments, mainly in hydro, irrigation and tunnel. Major projects under execution, as I said, the Subansiri, which is 2000 megawatt, where we are building the tunnels and powerhouse. Dibang project, one phase only has been announced. However, major dam project is yet to be announced. Arun 3 is 900 megawatt in Nepal, where we are executing the projects. Kiru and Kwar projects are based in Jammu and Kashmir, both more than 500 megawatt, and Shongtong is in Himachal. So these are hydropower major project under execution. In irrigation also, we are doing projects in Madhya Pradesh, Rajasthan, Maharashtra, like Rihan, Slimanabad, Jabalpur, Katua, Jigaon and Parbati irrigation. In tunneling, we have very experience of very complex tunneling. We don't do the normal ongoing tunnelings. However, wherever any complex engineering is required, in niche segment, Patel is one of the leading player. When we say Amarmal to Trombe, it is based in Mumbai, which is the water pipeline underground tunnel. Sidco again in Raigad, water pipeline underground below 80 meter of the earth level. The tunnel is under construction. PPG is again in Mumbai. So 3 tunnels we are building in Mumbai, and tunnel T7 is in West Bengal. And roads also we have completed quite a few projects. This image, which is on the up in this slide, is the Subansiri project, which is going to be India's largest hydro project in coming times, and it will come in news in few months. So these are few images of the ongoing projects. Dibang is in Assam, Subansiri is on the border of Assam, Arunachal, Kiru is Jammu, Kunda is pump storage project, PSP 500 megawatt, it is in Ooty, near Coimbatore. Tista is West Bengal, Shongtong is Himachal Pradesh, and Luhri is again Himachal Pradesh. Major completed project is Sera Pass. I have already mentioned the tunnel which is in near China border. Tunnel T15 is Jammu and Kashmir railway line. This is the glimpse of the tunnel where the railway line activity is already started. Subansiri nearing completion, and AMT is again. This is how the water pipeline tunnel will look. Through this tunnel, water will flow to entire Mumbai. So thank you so much. Concluding remarks from my side is, when we see any EPC player, obviously infrastructure industry is going through a dream phase, I would say. A lot of focus by government, a lot of big numbers, we can say lakh crores, but how this benefits my company? Because when I was young, I was studying, I used to read Economic Times when I was doing a CFA, MBA, I used to see big numbers. But then I started realizing how this is going to help me as a person. So this is when I realized I have to work hard, whichever job I am in, whichever company I am in. If I do well, then these factors will contribute to my life. Not only seeing the numbers, it will benefit. Same like my company. So being a EPC player, there are 2-3 factors which is required to grow. One is you should have good pre-qualification criteria, means you are eligible to bid any project which is being announced by government. So having 77 years of experience, having done projects like hydro, irrigation, tunnels, we have the required PQ. We are amongst the top 4 or 5 players in India which can be eligible for any project which is going to be coming, be it any size. Second is, you should have the required working capital. So majorly non-fund base is required and some portion of fund base is required. touch wood, we are definitely well placed in that. We have support from our consortium, we have support from insurance companies also, we have sufficient non-fund based limits available and good liquidity in hand to fund our projects. Third is you should have the resources, plant and machinery and employees. As I said, COVID era, during 2020-21, our employee strength was 1500 numbers. As the numbers grew, as we started growing, during the COVID era, my revenue was 1700 crore, which has improved from 1700 to 3000, 3000 to 3800, then 4400 to in 2024, and 2025 we crossed 5000 crores of revenue, which is the peakest revenue in our history in last 77 years. During this growth, we have increased our resources also. So right now we have more than 4000 employees on our rolls, which are contributing to various sites in India. So these three factors combined makes me eligible for bidding of any project. And obviously it is a transparent bidding process. If we are L1 and we get LOA, it is up to us how we execute. And we have shown the execution also, like recent hydro and tunnel project has been completed in time, which has been contributed by us also and by government initiatives also. So this combined factor will help not only Patel Engineering but companies like us who are true to their work. So it is overall beneficial for any segment. So on this note, I will complete my presentation. Thank you so much.
Great. Thank you so much, sir, for such a comprehensive explanation on the sector. I think all of us now have a pretty holistic view on the sector. And in fact, in terms of pump storage project, it's what I found quite interesting. So, and now people know where the sector is headed and how the company too is aligning its growth with that of the sector. So before I open the floor to questions, I have another question for the attendees. Now, since we will be shortly in conversation with credit rating expert Mr. Prakash also, so I want to get an opinion from the audience. Do you feel informed about credit ratings, how they work, how they affect NCD investing? Do put in a yes or no in the chat. So I already have a list of questions that attendees have already submitted with us during registration, and all the attendees are of course welcome to put in their questions in the chat so that our panel can address them. So let's jump right in with the first question to you, Prakash sir. So
Sure.
what does the regulatory environment look like in the bond markets, and does SEBI have any role to play with respect to credit ratings and credit rating agencies?
Thank you, Ria, for that question. Indeed, SEBI is the nodal agency, and it's the regulator who monitors the credit rating agencies. So it has got a vital role in the shaping of the rating agencies. Now, if you look at SEBI, they mandate very strict guidelines, disclosure norms, which every rating agency has to uniformly adhere to and follow. So SEBI also carries out rating agencies audit, which is done on an ongoing and regular basis. There are guidelines, protocols which needs to be strictly followed, and this is all done to ensure that there is the investor protection and the market insights are already there and integrity is maintained in the market. So SEBI has a major role to play there.
Okay,
Yeah.
understood, sir.
Yeah.
And so the rating scale is pretty much the same across industries. So how is an infrastructure company assessed differently? And what are the primary qualitative or even quantitative criteria that is used in the rating methodology for assessing infrastructure companies?
You're right. I mean, the rating scale remains uniformly applied across all the rating agencies, and that is mandated by SEBI. But if you look at the evaluative nuances of any infrastructure company, this will vary very differently from other corporates and other sectors. This is primarily because infrastructure, as Dr. Rishi mentioned, is a highly capital intensive, long gestation projects and completely project driven dynamics. And of course, there is a lot of regulatory overhaul also, which is required in this. Now, if you look at in terms of monitoring from a rating agency point of view, it's a mix of both qualitative and quantitative factors. So on a quantitative, it's broadly the assessment done on the financials, which you look at the revenue and the revenue stability of this company. You look at the profitability ratios, the leverage, how the company is levered, on the debt capacity, which is the repayment of the debt of the long-term debt over the next couple of years. You look at the working capital efficiency, the operating cash flows, and the liquidity buffers. So all these are put together. And of course, there is a qualitative factors which are rigorously measured. Of course, what we look at is, or what the rating agencies would look at is the pedigree of the sponsor who is undertaking such project, what kind of project execution or capability which the company has, and what kind of projects they have delivered, what is the operational history and track record of this company, the technical expertise the company has, uh, of course the geographic and the project specific diversification plays a key role in the assessment, and the management acumen. I mean, all together put together, if you look at, there's a holistic approach to arrive at the ratings. uh, Now of late, also rating agencies have started factoring in the ESG and the sustainability factors, the regulatory environment, and the counterparty risk. So all this embed together to deliver a holistic rating to the investors.
Okay, sir. Understood.
Yeah.
So my next question to you, Rishi sir and Amol sir, what unique advantages do retail investors bring to infrastructure bond offerings when compared to institutional investors? And what does this shift to a more diversified investor base mean for the future fundraising plans of companies in this sector?
Thanks for this question. It is great to see that retail investors are showing interest in the infra sector. Basically, it shows that for the companies like us, it is a diversity as well as stability from funding point of view. We don't need to be dependent on the banking system or the large institutes, and we have an option to have this retail investor in our place. Retail investors actually, as Rishi has rightly said, government is pushing the infra segment, and if retail investors are taking interest in that, so surely this story is going to stay long.
Right. Correct, sir. So I have a similar question for you, Prakash sir. Is
Yeah.
that how do you see infrastructure financing evolving in terms of reduced reliance on institutional funding and shift to a more diversified base of retail investors?
Yeah.
And additionally, what trends do you foresee in terms of EPC firms accessing the bond market?
Yeah. I mean, if you look at increasingly, the EPC players and the construction companies are leveraging the bond markets to achieve, of course, access, financial flexibility, superior capital market access is there, and all this comes leads to a greater financial autonomy for this sector. Now, traditionally, I mean, this sector has been pivoting from a historically high reliance on institutional lenders such as banks and NBFCs to a diverse set of investors. And now you see there's a lot of participation from family offices, HNIs, retail investors in the bond market. And of course, technology platforms such as BondsIndia also helps in terms of allowing participation to retail investors, wherein, as Rishi mentioned, he owns certain bonds. Therefore, a retail investor within a small ticket size is able to buy bonds through such platforms. So that is also pivoting a lot of change in this industry. I think, in my personal view, going forward, a lot of this public private partnership and SPVs will also see a lot of investments happening through bond market, especially because there could be no specific charge on certain cash flows of those projects, which will lead to another boom in the entire bond market, and especially on the infrastructure financing space.
Right, sir.
Yeah.
And Rishi sir, like you mentioned, that the government is taking a more proactive approach in this sector. So, are any the initiatives that the government introduces, does it sort of affect the financing models of infrastructure projects? And have these initiatives sort of influenced this shift towards accessing the bond markets?
Yes, definitely. See, why would an investor choose any product to invest? One is they should have surety that my returns are there.
Right.
There is a principal protection is there, and what kind of projects or what kind of company they are investing in. So companies like us depend on the government initiatives. When we see government initiatives are being taken seriously, government are taking a lot of initiatives like government infrastructure pipeline, Gati Shakti as mentioned in my projects. So they are focusing on industries like power, road, irrigation, railway, air transport, water transport. So a lot of push is there on these sectors. In fact, if you see a few of our PM speech, 2025 to 35 is going to be the decade of hydro project. That is what he has announced. So when government is making such statement, that means they are going to push proactively and practically taking every step to make sure that hydropower projects are being announced and completed on time. So for a retail investor who doesn't have a lot of access to actual due diligence on a company. So when as Prakash ji said, I've started investing in bond, which I was not doing few years back. I was doing equity, but then I understood my limitation on understanding any company. How much ever I do technical analysis or fundamental analysis, I cannot know what this company is doing. I'll have my limitation. Going to a bond market, I'll have some due diligence has already been done. Companies coming from bond is and rated. So experienced stalwarts like Prakash ji, who has been a rating head in one of the prominent rating agency, has already seen that project and given their okay before they issue a bond. And then companies like these platforms, BondsIndia, India Bond, they do their due diligence. So I am sure that sufficient due diligence has been done. It is safe for investment and I'll have better return and less risk than a bank FD or an equity investment. So I would, whenever I make a portfolio, I would always have bonds in my portfolio to make a balanced portfolio investment.
Right, correct, sir. So, Prakash sir, infrastructure companies generally execute government projects or even public-private partnership projects. So, do changes in the regulatory environment sort of affect ratings for companies in the sector?
Absolutely, you're right. I mean, any regulatory changes will definitely have a significant impact on companies, especially on the infra space. Now, why? Because this space is very sensitive to any policy changes, any policy dynamics, or any regulatory flux. Now, any small adverse shift in project approvals, say, or a pricing redefinition, which is tariffs, or any policy discontinuity, can have an adverse impact on the credit profile of the companies, because then those can impact the future projections and the cash flows of those companies. Therefore, government policies do have important role in this sector, and this sector is adequately supported by government, and they have been, as Rishi mentioned in his presentation, and we have seen the kind of policy decisioning, fast single window clearances which are happening on large ticket project sites is helping to growth in this sector.
Okay.
Yeah.
And my next question to you again, Rishi sir and Amol sir also, is that infrastructure projects often have long investment horizons and they face operational and financial risks. So, are there any segments that face more execution risk than others? And what advantages do bond markets offer companies when it comes to managing these long-term risks?
See, any business will have their own risk, and similar risk are there in hydro, irrigation, tunnel segments also. There are geological risks, there are policy risks. There were risks which have been mitigated. There are risks which are beyond control. I'll be very transparent. See, it is not only positive and smooth functioning that project started and gets completed on time. A lot of innovation, a lot of initiatives goes in completing a project in time. Earlier, we had policy issues, initiative issues, approval issues, which have been taken care of, which we don't have to worry about. We have to worry about how to finance the project and how to complete the project. So as Patel Engineering, we have more than 7 decades of experience. So we have sufficient experience, we have sufficient technologies to take care of any issues which we face on any project, be it tunneling or hydro or irrigation segment. When I say we are completing the largest hydro project, when we say we are completing the most difficult hydro project, we have completed projects in Parbati, which is on Parbati River, Himachal Pradesh, the top of the mountain, where a lot of cloudburst used to happen. But however, we understood how to mitigate that risk and we completed that project. Parbati project, for a layman, I would say, if you know Manali, Manali के ऊपर आता है मणिकर्णिका, मणिकर्णिका के ऊपर कसौल, कसौल के ऊपर है पार्वती रिवर, जहां पर पटेल ने प्रोजेक्ट खत्म कर चुके हैं, and all projects payments have been received on time. Similarly, Sela Pass, which was very difficult, the tunnels, the underground tunnels, so difficulties है, but yes, if you have the required experience, required manpower, required technologies, then all projects, because हर project एक प्रॉपर जियोलॉजी स्टडी और डिजाइनिंग कंप्लीशन करने के बाद ही अनाउंस होता है. सो दे नो व्हाट काइंड ऑफ रिस्क कैन ऑकर. Yes, it requires two-step solution, 50% from government side, 50% from contractor side. So this has been happening now. Both are understanding both of us problems. So I'll say अभी एक बहुत ही बड़ा, I would not name the project, एक बहुत ही बड़ा प्रोजेक्ट अनाउंस होने वाला है. So पहले क्या होता था, पहले बिड डॉक्यूमेंट सीधी आ जाती थी and then you see if I'm fitting in that pre-qualification, tab main bid karunga. However, this time what government is doing, Power Ministry has called the big contractors who might be eligible. Ki we are coming up with contract. Do you have any views? Do you have any risk which you see, which we can make in change this contract? Even if you get the contract or no, it is not relevant. But the contract should be completed. So we have done our study. In last 3 years, we've done the soil testing, geological study, environmental clearance. But we want to know the view of people who are doing the projects. So 4 or 5 big players, one of us was us, we have been called by the ministry and they took our views before announcing any project, which is a very good initiative. So this kind of initiative government is taking, which mitigates the risk. Then obviously, then we are also motivated enough to complete the projects. And they have solid monitoring now. They have their 24-hour team which is monitoring any project site. They have their independent engineers which are on site. If you have any issue in design or dispute, they sort it on the site, which used to take years to sort previously, before 8-10 years. Right. So such independent engineers are working from government side to enable clearance of dispute on site. Then obviously payments are on time. They are making sure of that your receivables are getting cleared on time. So all this initiative helps us, take bigger projects. And coming to retail investment, yes, we have one option to go for financing. So equity, yes, we are seeing right now my equity investment is in minus in last 2-3 days, and 5-6 months of equity market में क्या हो रहा है we all know. So किसी ने कुछ कह दिया और all market goes down. So I have had my risk that side. However, the investment which I did in FD also. See, I'm not degrading any FD investment. It is safe investment. If you go to balance out, you have to put some FDs also. So I have FDs also, I have bonds also. But जब मेरा average हो जाता है. So suppose how you have to average your investment is debt, equity, and other products. May real estate also. You have to balance. Suppose you have 100 rupees. I do 30, and 10 I put it in liquid fund or FD fund. So कभी equity में less हुआ तो I know FD is giving me 6%, 7%. Bonds are giving me 10%, 10.5% average. So I am mitigating my own risk through diversifying my investment. That is what I would advise humbly to all retail investors, that don't choose any one single product. Try to balance out. Go for higher return products also. Go for higher risk products also. But then जहाँ पर return make sure हो ऐसे ही products में invest करें, which can be bond.
Yes, sir. And I think with the PPT and with the question answers, we've covered a lot. So I would like to ask the audience also one question, is that what attracts or would attract you as an investor to invest in an infrastructure bond? And a similar question to you, Rishi and Amol sir, is that with the rise of retail investors, would how projects are planned and executed change? And in your perspective, what would make an infrastructure bond a good opportunity for retail investors?
As I said in my earlier answer also, that retail investor showing interest in infrastructure bonds is a good indication. It shows that the people are believing in what government is projecting, and that is the roadmap basically where our government want to take India to the levels up. By investing in this, retail investor, as Rishi said, can have that satisfaction that I'm also contributing to the nation or growth story of India. Yes, but simultaneously, how that will help us is that government is coming up with various projects which are of longer gestation periods or longer tenors. To match that funding requirements, bonds will certainly help us. There are certain categories of investors who look for a longer term investments with a fixed returns kind of nature. So in that case, if these bonds are being issued and has been invested by the retail investor, it will be mutual benefit for the companies like us as well as the retail investors.
One more point I would like to add is, when you mention long-term projects, so sometimes projects are 5-6 years, 7 years, 8 years also. But obviously bond have some limited duration, maybe 3 to 5 years. So, but it helps in such projects also, because big projects has longer mobilization period. So suppose I am doing a 10,000 crore project, which is having a duration of 8 years. So initial 1.5 years, 2 years will have mobilization only. So where the billing will not start, because we'll have to access to the site, we'll have to do the pre-operating expenditure, we have to create some infrastructure to actually start the billing work. So once after 2 years, when the regular work has started and billing has started, billing has increased maybe. That may be 50 crore, 100 crore per month. till that period, short-term bond investment like 3 years, 4 years will give that mobilization funding advantage that we have the funds available to mobilize. And because after 3 to 4 years, we'll have the billing and collection from the side. We will not require fund. So this will be a very suitable investment opportunity for companies also, retail bonds also, where they see the project duration and they see which kind of period they are going to fund, because after that project will be self-funded. See, in all companies, not us, various companies are believing in taking self-funded projects, whether they don't have to infuse too much funds. Yes, initial mobilization and working capital you have to infuse, but average, once the project achieves 30-40% of progress, that project should be self-funded, because you are at the peak of construction and you have the peak of billing between 40 to 70 or 80% of any project duration. In that project duration, all repayments are all done, all finances gets cleared, because after 80%, this is where you get the retention money. And so projects initial 30-40% phase, initial 2 years only requires funding, wherein structures like bonds, like 3 to 4 years can be a suitable investment.
Okay. And Prakash sir, since we're talking about retail investors, do you think credit rating agencies play a role in increasing retail participation? And are there any steps being taken to strengthen the credit rating process so that investors gain more confidence while investing in NCDs?
Sure. So Riya, credit rating agencies play a pivotal role in amplifying retail investments. Especially the credit rating agencies, when they rate any issuer or any instrument, this comes with verifiable risk assessments. There is complete due diligence, there's independence, and there is a detailed report which gets published as well. So for a retail investor, this clearly helps him in terms of getting a gist about the entire dynamics of the company, the risks of the NCD issuance, the covenants which are levied. So he comes to know everything. Now, having said that, of course, retail investor needs to be very cautious, and at the same time actively monitor such rating reports, because any rating is also subject to surveillance, and there is annual surveillance, but there is also surveillance which happens based on market risk and dynamics and changes in the government policies. So any impact on the ratings, which could be upward or downward, will have a significant impact on the credit profile of the issuer. So therefore, it's important that the investors also monitor this on an ongoing basis.
Right. Yes, sir. So now the infrastructure sector is, of course, facing, getting a lot of focus from institutions, from the government, from the retail participants as well. So according to you, what kind of, new opportunities, maybe unexpected, are emerging in this space that investors should look out for?
See, there are a lot of new opportunities coming up for players like us, and similarly, it will turn up to opportunities for investors also. The government is putting focus on development of infrastructure, be it road, ports, airports, power, irrigation, smart cities, connectivity between cities, road network to remote areas also. So I come from a very small area from Rajasthan called Bhinmal. When I was small, there was no road. But now because I've been there 2 years before, there was direct road to my village without any hiccups. The roads, it's not bad to say, but roads are better than Mumbai. My village has better roads than Mumbai. So, and I think as per some reports, India, more than 80% villages have road connectivity now, right? So that I can be assured that मेरे गांव में आ गया मतलब सब जगह पहुंच गया होगा. So see, these are small initiatives will open up a lot of sectors, not only power sector, other sectors also, logistics sector, transport sector, even it will boost agriculture sectors also. So companies who are contributing to such growth in power, irrigation, infra, agriculture, logistics, transport will have benefit, because government focus is there, and government का target जो है इंडिया को third largest economy बनाना, ये सब चीज एक साथ करनी होगी, अच्छे से करनी होगी. गवर्नमेंट को भी और इम्प्रूव होना होगा, हमारे ऐसी कंपनीज को भी और इम्प्रूव होना होगा. अगर कोई प्रोजेक्ट हम 5 साल में कंप्लीट कर रहे हैं, वी विल हैव टू ट्राई इट शुड बी कंप्लीटेड इन 4.5 इयर्स विद बेटर क्वालिटी एंड विद द इम्प्रूवमेंट इन टेक्नोलॉजी. जैसे पहले टनलिंग में कोई इशू आता था तो टनल्स रुक जाते थे, तब टीबीएम मशीन में इशू होने लगते थे. वी हैव सीन टेक्नोलॉजी एनआईटीएम, ऑस्ट्रेलियन टेक्नोलॉजी, व्हिच वी हैड स्टार्टेड इंप्लीमेंटिंग इन सेला पास आल्सो. But now other companies are also implementing. So a lot of new technologies are coming. I mean, road also. Road mein Japanese technology they are planning to use. Obviously, right now a lot of road conditions are not good, but government is trying to improve and learn from their mistakes. Power में हमने बहुत सारे initiatives लिए. We have double tech capacity in electro technology. RCC dams आ रहे हैं अभी, which will have longer duration. पहले hydro power project को बोलते 60 या 70 years होता था. अभी नए projects जो बन रहे हैं उनकी duration 80 to 100 years they are projecting. तब तक इसमें और कुछ नहीं करना है, normal maintenance करना है. Once hydro project is created, it will have 100 years of life. So investors can take benefit and take some surety out of it कि yes, अगर गवर्नमेंट इतनी फोकस है, they are putting lakhs of crore rupees, companies are focusing, then obviously investing in such products will be a safer avenue for us. So obviously, Prakash ji has mentioned, due diligence is required. बिना देखे blindly don't invest in anything, be it my company or any other company. Go through their credentials, go through their track record, go through the journey they've had, the kind of projects they are doing. Then take your cautious decision, take your risk and return methodology also into place. What kind of return you expect, because there are various bonds available in the market on a lesser rate also, on a higher rate also. You have to understand the company and accordingly take a informed call.
Okay. And now that infrastructure projects are being increasingly funded through the capital markets, like you said, that bank guarantees to have their limitations. So now that they're being funded through more market-based participation, what unique strengths does the company leverage to sort of stay competitive in this environment?
See, the company like us basically rely on the three major parameters. Like we have got over the track record of over 76 years, we have got a good manpower base, which is knowledgeable, technological, competitive. We have got abilities to mobilize funds whenever it is required, and we have got the technological know-how, how to handle different situations, complex projects and all. So these are our competencies which enable us to take new or innovative projects or mitigate the risk involved in the projects. Further, we take a pride in completing such complex works.
Right.
I think that's
okay. And Prakash sir, have you seen any recent trends within the infrastructure space that have caused higher or lower ratings for companies in this sector?
So Ria, what has happened if you look at with the digitization and technological advancements, a lot of infra companies, especially Patel, I have seen the kind of project management technologies which is being used and digital technologies which is being used, which also helps in faster track completion of the projects and at the same time better monitoring. And also, if you look, there's a evolving ESG compliance requirements, and even the large corporates now are being mandated to ensure there are ESG protocols which are laid are being followed. So these are positively impacting the ratings for those companies who are able to manage this. However, having said that, this could also be negatively impacting those companies who are not able to really follow these protocols or guidelines and not able to adopt to the newer technologies. So of course, the trends is a mixed trend. There are both mix of upgrades and downgrades which you would see. Upgrades would be primarily driven by completion of the existing projects, which is basically from an execution to an operational asset, deleveraging of the balance sheet, adequacy of the cash flow, liquidity, and better financial prospects. But on the same line, if you see, there have been few downgrades as well on the infra space, and this is primarily where there has been project cost overruns, and this has led to significant borrowings, weakening of the cash flows, leveraging the balance sheet, as a result of which the companies have not been doing great. So such companies where the order book is not prominent or is not or the projections doesn't show them, possibly will undergo such kind of changes. But yeah, with the, at least I can say the ESG protocols and the technology has helped those companies to have a better ratings.
Okay.
Yeah.
And so now shifting the focus towards the company, the share price of the company has seen some activity in the past and over the years. So what is the company's outlook on what has influenced this?
See, I'll just add to few points before coming to the share prices. Rating, as Prakash was mentioning. So we are fortunate that we have seen continuous rating improvement in last 4 years. since COVID, which was the rating was BB, then it was improved to BBB, then BBB plus, and now we are rated A minus by India Rating, Acute and Informatics, all three agencies. So there has been continuous rating improvement in Patel. Coming to Amol's part of financing, we have been continuously raising various types of products. Like we have obviously bank finance is available. Banks have been supportive to Patel. Then we have raised QIP also last year. Around 400 we raised to fund our projects. We have recently closed a bond issuance also, which the size was obviously smaller, 50 crore. However, we got oversubscription for that project, bond project. So it was oversubscribed, and now we are talking to insurance companies for surety bonds also. So time to time, we are thinking of various suitable products for our growth, and we are going for those products successfully. Coming to share price, obviously share price is a combined result of various factors. It is about how company is doing. It is about how investors are pursuing this company. It is about the macroeconomic factors also. आजकल तो इंडिया में क्या चल रहा है ना यूएस में जो चल रहा है उससे सबसे भी शेयर प्राइस अफेक्ट हो जाती है. However, one thing I can mention is if you see the share price before 7-8 years, then obviously there have been improvement. There have been reduction also. However, price up have been stable of late. I think मैं 5-6 महीने से देख रहा हूँ stable है. However, share price it is market forces. As a listed company, we are not allowed to comment too much on share price. Yes. However, as company is fundamentally strong, balance sheet is good, team is good, and scope is bright.
Okay. And so promoter share pledging is also often a broader capital management strategy that is taken up by growing infrastructure companies. So could you give us an insight into what is the current promoter pledge level, and what is the management's outlook on this?
Yes, from time to time, yes, as you said, this is one of the avenue of the capital raising for the infra companies. The promoters are currently holding around 36%. And time to time, promoter has never seen back. Actually, whenever there is a requirement in the company for any cash requirements, promoter has placed their shares and infused the funds into the company. And because of that, currently it looks the promoter shares are being pledged. But yes, going further, as the company is improving, balance sheet is strengthening, we are mobilizing more and more projects. So going further, we will reduce this percentage of the pledge over the period.
So it can be taken in a positive way. Why they have pledged the shares? They have not pledged the shares to borrow the fund and do divestments or other investment. Yeah. All the money they have borrowed against those shares has been infused in the company. Yes. To support company's growth. So rather than going for increase too much in bank finance in last 7 to 8 years, obviously at that time when we are talking to 2025. If we talk about 2017-18, where banks and institutions were very risk averse to investing in any EPC company, then what do you have to do? Your promoter has to take the step forward. And our promoters have taken the step forward at the right time. They borrowed the funds and they've infused in the company, which has helped company stabilize the operations. And now we are seeing the results of it. Right. So if you see the last 4-5 years growth, the revenue has tripled from 1,700 to 5,000 crores. Even the profit has more than tripled. So this has happened from a combined contribution from promoters also, from team also, from banks also. And we have had, from a finance team, we've had that principle that we don't have to increase a lot of bank finance in last 7-8 years. The bank finance has substantially reduced when we were funding the operation through promoter funding also, or from working capital operations also. And from various government initiatives, we have realized funds against government receivables. Now we are seeing a different era where we are seeing big projects under bidding and different avenues in non-fund based and fund based also. That is why we are open to other various products like equity, bond or bank finance, because when we go for bigger projects, we'll have to have options in hand. So that is how we have started raising equity, bond in last 2 years to have options for the management, because when we take a project which is worth 10,000 or 15,000 crore size, we should have sufficient financing option to take up that project. So our role is to make all available options for the management if they have to decide for any project, so that once we start the project, we only stop once the project is completed, not any midway.
Yes, of course. And Prakash sir, so with the increasing role of the bond markets right now, how are newer financing structures sort of influencing the ratings of companies?
So indeed, with the innovative financing structures, such as if you look at revenue securitizations or a hybrid bond and credit enhancements, they have introduced an additional layer of risk element, complexity, and diversification. Though, while these instruments bolster initial funding requirements and also potentially improve the liquidity matrices for a company, they can elevate structural risks. And this could be in the form of refinancing, or it could be form of asset encumbrance or a governance stringency. So these factors are therefore integrated rigorously in assessing the company's ratings for external credit ratings, and ensure that any upside opportunities and latent vulnerabilities are quite addressed and a holistic view is presented. So that is, to sum up, it's important.
Okay,
Yeah.
understood.
Yeah.
So we've covered a lot of questions, and the audience has also been putting in a lot of questions for us. So we'll be taking a couple of questions from that as well. So the recent bond issuance that Patel Engineering has done has a staggered redemption structure. So what was the reasoning behind this approach? And the company also has the bond issuance also has a call option. So what is your view on exercising this option?
See, the structure for going for this staggered repayment was to get the cash flow flexibility for the company and to have a control on the repayments we are lined up over the period, considering our different project cash flows. And similarly, the purpose for this bond was to mobilize the funds for the new projects. And once the projects are mobilized, as Rishi earlier question said, that once these projects are mobilized in the initial 1 or 2 years, after that it generates the sufficient cash flows for the repayment of this whatever the instrument we have raised. So accordingly, this repayment structure has been scheduled. Now coming to the call option basically is a tool for us to handle that, I will say, take the advantage of that particular situation, how the market evolved over the period. If it is favorable, the interest rate are lower and cash flow are sufficient, we will prepay, or else we will continue.
So we can optimize the cost of funding at that
Yes.
time.
Yeah.
Yes.
Okay. So our next question is for Prakash sir. Is that what advice would you give retail investors when they're deciding to invest in an infrastructure bond?
Yeah, so my advice to retail investors would be ensure that you do a complete due diligence of the bonds or the issuance which you are likely to invest. And of course, at a corporate level, you cannot get into very details, but there are rating agencies which publish for the listed entities. The reports are there, and one of the suggestions would be that go through the entire detailed rating report. You also look at in terms of what is the structure of the NCD, whether it's a corporate bond, whether it's a project specific bond, whether it's a green bond, what kind of bond issuances are happening. Look at the entire term sheet of an NCD. Look at the various covenants, look at the sponsors pedigree, the history, look at the key financials, look at the business risk, and more so look at the overall management risk of the company. And all these are well covered in the rating report, which is published by rating agency. So all this will help a retail investor in taking a very calculated risk, informed advice, and also help them in transparent decision making.
Okay.
Yeah.
And we will take one last question. So, last question to you, sir, is that the company has witnessed a rating upgrade this year from India Ratings. So, do you expect a further rating upgrade in the future, considering the company's performance?
Yes, we are definitely positive on that.
Okay. And anything
See,
else?
Prakash ji being a ratings, I would appreciate that we cannot give forward-looking statement as a listed entity.
Yeah.
Yes, we are sure of our abilities. We are sure of the current order book we have in hand. We have good liquidity in hand, good project execution capacity, and we are hopeful of good projects coming in. So our balance sheet is already healthy right now. It will improve with time, and we are hopeful that rating will see an upgrade, and you will see it when it happens. I will not comment on that. We will definitely do it.
Okay. Okay. So I think we've covered a bunch of questions from myself, from the attendees, and from the questions that we received during the registration as well. So I think everyone now has a better understanding of the sector and of the company and of how credit ratings work. So with that, I would like to end today's webinar session. I hope all of your questions were answered, dear audience. And even if you have further queries, you can reach out to us through our through our website, and our representatives will surely reach out to you. I would also like to add that Patel Engineering has come up with a book. The name is Secret Behind the Growing Bulb, which is authored by you, Dr.
Yeah.
Rishi. So,
May
would
I
you like
brief-
to?
yeah,
Yes,
it's very
sure.
close to my heart. So this is a book, Secret of Hydroelectric Projects, Secret of Glowing Bulb, from River to Power. So my daughter gave me this inspiration of writing this book. She was studying her book and she was reading about some project, Koina project, Bhakra and Engel projects. So, and I was so proud to listen to that Koina project was built by Patel Engineering. So I asked her, do you know who created Koina Dam? She did not have the idea. So that is how I thought that we should write a book wherein kids from the 5 to 15 or 20 years of range, they'll know dams. Because when I used to go to a dam site, I used to see only water and see as a tourist, you know, aap itni ऊंचाई tak chale gaye और so much water is there. But how power is created below dams, not many people know. I came to know when I joined this company. So there are underground tunnels, under mountain tunnels are created, powerhouses are created, turbines are created. That is how the power is generated from water, and that is how the water comes to our home, and the bulb is, you know, when we switch on the bulb, it electrifies. So if you or your kids reads this book, they will understand why switching off a bulb is very important, because building a hydropower projects, creating electricity takes thousands of hours of works of engineers, a lot of funding, and a lot of efforts. Then the electricity comes to our home. In Mumbai, we have electricity for 24 hours. My village, a lot of remote village, they don't have 24-hour electricity. So electricity consumption is very important to know. हम काम बहुत कर रहे हैं, but consumption जब इसका efficient होगा, then only India can have a power surplus. So this has been created in a language where kids will understand. It is not very boring or this is in a comics way. This has been created where any kid will understand how power is created, and the Dadaji actually takes him to the power site on dam and shows him by one step how in hydropower electricity is generated. So I hope this will be useful. And this book we have dedicated to our late MD, Mr. Rupin Patel, who was a gem of a person who has taught me a lot. And this is a dedicated, something from our side to him. So we hope in Patel we continue his legacy, because he was a third generation entrepreneur. His grandfather has started this company. Now it is led by a professional board, which is led Janki Madam, who's the chairperson, and Kavita Shirvekar, who's my boss, as a MD. A very professional and equipped board. And I hope this book helps everyone. Thank you.
Sure, it does look like a quite interesting book, sir. And thank you so much, all of you, for joining us and giving us some very detailed insights. I personally learned a lot. And thank you so much, everyone, for joining us. Please do have a good day.
Thank you.
Thank you, everyone. Thank you.